Hello, everybody. Thanks for joining us on this interactive webinar on Bollinger Bands and the strategy related to Bollinger Bands. So today we people have Mr. Chintan with us, who is the founder of TWODS Capital. So I'll give you a brief introduction about him and a brief introduction about me. So Chintan is founder of TWODS Capital and he's an NISM and SEBI registered derivative analyst. He has completed NISM derivative analysis in equity derivatives and currency derivatives. And Chintan keeps creating strategies which are related to equity intraday strategies, or maybe or some strategies towards the currency sides and etc. So as of now, we people have two of Chintan's strategy live, which are in terms of intraday strategies. And I'll be showcasing that strategy maybe at the end of the webinar. I would like to invite Mr. Chintan to actually come and address everybody to address all of us with regards to Bollinger Bands, which is based on one of his strategy, mean reversal. So Chintan, over to you.
Yeah, hi guys. I'll share my screen first of all. So today we'll talk about Bollinger Bands. So I'll give a brief introduction about this from start to end about Bollinger Bands and what it actually is. Just a second. Yeah, so we'll start off right away. Yeah, so this is Chintan Ruparel. I am currently pursuing engineering and computers, and I am building strategies for AlgoBulls, and I also am the founder of TWODS Capital. So what is TWODS Capital? It is a web channel for providing news to everyone. We have a client base of almost 170 users as of now, and yeah. So if anyone is interested in joining the group, can scan it here, and I'll of course post the link in the chat section. Yeah. I post the link in the chat section. Oh no, it didn't work. Yes, so the chat, I've posted the link. We'll be back with Bollinger Bands. Yeah, so what are Bollinger Bands? Bollinger Band is practically a technical indicator, which makes us understand how a market will perform on the basis of one technical analysis. So yeah, Bollinger Band is a technical indicator. It consists of three bands. The one is the mean, that is a simple moving average band, just calculated by the software itself. And second is the mean, is a standard deviation. So how is the standard deviation calculated? We'll go further in this session and learn about it. So the three bands forms. So yeah, this was made by world-renowned trader John Bollinger, as the name suggests. So yeah, the Bollinger bands consist of three main bands, as I told previously. The one is the simple moving average band. This is calculated by the software itself. So let's say we are using TradingView or investing. So the software is made in such a way that it can calculate all those values and give it to us so we can use it for our analysis. So the second is the upper band. So what is the upper band is like? A Bollinger band forms a band which we'll watch in the chart view in the further discussion. Yeah, so in the further discussion, and it is calculated using standard deviation. It's a method which is commonly used in this derivatives field. And second is the lower band. That is one standard deviation away from the other one. Next. Yeah. So what does all these bands indicate? See, the median band or the middle band is a standard moving average. So what does a moving average work? How does a moving average work? So how is moving average calculated first of all? So let's say we have data for 10 days. Let's say we have 10 closing prices of data for 10 different days. So if we add all those data, then divided it by the number of days, so let's say 10 in this case, we'll get a value that is called the simple moving average. Excuse me. So by that, we can get the simple moving average, and that is plotted over the graph. So the band, so each band has a specific indication, which helps us do analysis, help analysts do analysis, and which makes our job easier. So the lower band, so every band forms a structure of its own. So let's say that if the band, the current candle falls below the band, that's the bearish signal. So see, when the price of the security is near the lower band, so let's say there are three bands. The middle one is the mean, is the moving average. The upper one is the upper band, and the lower is the lower band. So when the price of the security is near the lower band, the overall trend will be bearish, and the security will be oversold. So here to again understand oversold and overbought is a different thing. So let's say overbought stocks are stocks which might be in a bullish trend and have topped out. But while overbought stocks, no, I actually messed up. So overbought stocks are stocks which are bought way too heavily and the prices are inflated. While stocks which are oversold or which are undervalued are called oversold stocks. So let's say when the price of the security is near the lower band. So when the price of a security, so let's say the lower band is at 10 and the price of security is at 12. So there might be a bearish sentiment, the trend might be bearish, and if it has fallen, and the overall trend will be bearish. Same thing when the price of security is near the upper band. So the upper band means the price of the security is rising. So the security is overbought and the overall trend is bullish. So let's say if the top of the upper band is around 15 and the security is around 13 or 14, then that trend will be overall be bullish. Okay, so yeah, so that's it. That's what a Bollinger Band indicates. We'll see how it looks on a graph. So yeah, see, this is what our this is what Bollinger Bands look like. This is Nifty's 5-minute chart plotted on, let's say, to yesterday. It was plotted yesterday. So yeah, so see, you see the orange line here in this case. The orange line is the calculated standard moving average. Simple moving average. It is calculated by the software itself. And every time a new candle is formed, a new value is taken and the older one is removed. It works like a stack. So every time the moving average is moved and the price rises, so does the Bollinger Band. So if there is certain alteration in the moving average, the standard deviation of both the upper and the lower band will change. Same way, let's say that, see, the orange line is the standard moving average. So from the start, if you see, there might be a certain bounce in moving average. So there was a bounce in the upper band and the lower band as well. This is how a Bollinger Band look like. You can use it. It's very simple to use, but it is like not only the only indicator to that by which we come to know that whether the trend is bullish or bearish. There are many other factors. We should look at what the volumes are, what the overall trend is. If the overall trend is negative, then most of those technical indicators don't work well because the overall trend and the sentiment in the market is a bit bearish. So yeah, this is what a real Bollinger Band looks like. I'll re-revise the concept. So the orange line here is the simple moving average, while the top blue line is the upper band of Bollinger and the below blue line is the lower band of Bollinger. How is simple moving average calculated? It is the average of 20. Let's say if we take 10, so it will be the average of 10 days closing prices of a security divided by the number of days. So let's say if we take 10, it will be divided by 10. If it's 50, 50. If it's 200, 200. So that's how a moving average is calculated. Second is how is upper band of Bollinger calculated? The upper band of Bollinger is calculated by finding the standard deviation of the simple moving average. In this case, the simple moving average is the main factor by which the value of the band is decided, and the pattern by which the by the pattern which the bands form is very important in determining the price structure. Once again, it is Bollinger Band isn't the only thing which influences market. There are many other factors which we have to look, whether it's a volume, the trend, and many other the sentiment of the market. There are many other factors on which market movement depend on. So yeah, that was Nifty's 5-minute chart on December 2021. The middle orange band is the simple moving average. The formula here is the formula is in the next line. The moving average is calculated by adding the closing rates divided by the number of days data. So let's say if we take 10, then 10. I told you that. The upper band of Bollinger is the standard deviation of the moving average in the positive category. So we have to, let's say if standard deviation is at 0, that is the moving average. So if we calculate in +1, that will be the positive band. And if it is calculated in the negative category, it is the negative band or the lower band. The standard deviation is the measured amount of variation. So let's say of a set value. So let's say if we take 0 and +1, the standard deviation will be different. Let's say 0 and -1, the standard deviation will be different. Yeah, so the upper band is taken in the positive category while the lower band is taken in the negative category. Yeah, that's what Bollinger bands are. So yeah, here you can see how is standard deviation and simple moving average calculated. We'll work first on the simpler one. The simple moving average is calculated. So let's say A1, A2 plus A3 are 3 days data, and N is the number of days. So let's say 100, 120, and 150. So if you add all of them and divide by 3, you will get the simple moving average. So you don't have to do it on a daily basis. The softwares nowadays are very advanced and which can help doing it. Second is calculation of standard deviation. This requires some sort of calculators or let's say root tables or something. So it's better if the software does. So let's say the sigma is the root of N is the size of population, Xi is the each value. So each value of population means the each day's data, like each moving average data and the difference between it. And N is the population mean. Right? That is how standard moving average and standard deviation are calculated. So yeah, possible events when seeing Bollinger bands. So the movements of bands. So there, if we see a structure of band, there's something which we can derive from it. So every technical indicator out there, be it RSI, be it Bollinger bands, be it anything, has some sort of structure. So let's say breakout, breakdown, squeeze, head and shoulders, and there are stuff like that which derives something or the other, which makes a chart structure more readable to the analyst. For that, we need to study what the structures are. So let's say if a Bollinger band, so what is a breakout? So every structure created by Bollinger bands can have three major types of things. There are many other, but the three major one are a breakdown. A breakout is when a stock price breaks a certain resistance. So let's say if a stock is moving between 80 to 100 and it goes to 50, but then again comes to 100, but it doesn't cross 100. So that 100 becomes the resistance level of it, while 50 becomes the support of it. So how is that calculated? That is, if you see a graph, it is more simpler because that is how it is way too visible to the eyes than if I can explain or not. So yeah, same as what the breakdown is. So let's say if a stock is moving between 80 to 100 only, but there's some bad news, some sentimental change, some board member shifting, some sort of bad news, then it will break down that level, which is the resistance level. And if it breaks down the resistance level, the trend will change. See, again, there are many things in which we have to derive whether it is going in downtrend or no. There are many other factors on which it depends, but the main factor here is that if it breaks and there is a spurt in volume. So see, volume is very important here. It can see if there is a breakout but there is no volume, the stock might not have a good moment according to your calculations. But if the same happens with volume, then yeah, it might. Second is breakdown. So what is a breakdown is that a breakdown is a downward move. So let's say, so I told you, if a stock moves between 80 to 100, and if that 100 is its resistance, 80 is its support. And if it breaks its support of 80, it falls down below 80, there is a bearish sentiment created overall, which is negative for the company, which is negative for the stock, which is negative for the investors. So there's a breakdown in its share price. And that too, if there are no volumes, then the breakdown can also be sustained. But if it is with volumes, then the downtrend can continue for a certain period of time, and we can eventually see a downward trend or the downward spiral, what we call it. So what are the squeeze? So squeeze is specific to Bollinger Bands, while breakout and breakdown are specific to every indicator or even to normal charts. So let's say if we use squeeze, so what is squeeze? So when the bands of Bollinger come together, so let's say if the stock is going sideways. So what is sideways? Stock goes sideways, and then there is no much of a movement, there is no much of a bounce, there is no much of volatility in the share script. So when the bands of Bollinger both come close to each other, it constricts the moving average. So let's say if a stock is going between 100, 120, 100, 120, so even the 20-day moving average will become a constant. And the standard deviation of both of them will also become constant because there is no certain movement which will create a move in the Bollinger. So that might create a period of low volatility. It's okay if you don't understand this right now because we have the chart section coming up. Yeah. So yeah, this is what a breakout looks like. So let's say this is ITC's chart, which is from, let's say, in May. So that's a May 2018 chart though. So yeah, if you can see around 18th May, there was a break. There was a breakout in the Bollinger Band, which I have pointed out. The candle has crossed the Bollinger levels, which has related into a breakout in stocks with good volumes. You can see there's a good spurt in volume also, which is nowhere close to the previous volumes. They showed a great momentum in the stock, due to which there was a positive sentiment created around the stock. So let's say on 16th, no, it's not 16th, it's 19th May. So 16th May, it had little volume. On 17th, it had a little, and 18th, the volume was something way too much, which helped it broke the Bollinger Band's upper band, like it crossed that levels, which created a high positive sentiment, high momentum in the stock, and higher movement, which got rewarded. So let's see if you bought the stock when the Bollinger Band got crossed around 268 levels, and if you bought the stock if you think that the Bollinger Band has a breakout and you buy the stock during that time, and let's say you buy it around 265, 266 rupees, and on that basis that the Bollinger Band has broken with good volume, you can see a upward spiral has gone till almost 290 to 280 rupees. 288 rupees was the top and 290 was the intraday high. So that's how Bollinger breakouts and Bollinger Band work. Again, there is a difference between breakout and Bollinger Bands with volume, and breakout and Bollinger Bands without volume. So this one was with volume and it did sustain at higher levels. So there was a possibility if there was no volume on 18th May, there was a possibility that the rally wouldn't have happened as expected. But there was a good support by volumes, and the buying continued, and which propelled the stock from almost 266 to upwards of 290. Yeah, so that's how a breakout works in Bollinger Bands. So how do you find a breakout? So let's say that the candle of 18th May, if you see the candle of 18th May, it has broken the Bollinger Band and like it has crossed. It's a very big candle. And if you can see the volume, the volume there is also very high. Which has created a big, massive chance that there might be a rally coming up in the script. So, and eventually that happened because there was a support from volume and the Bollinger Band was also broken. So let's say if like it it would have rewarded the person who works on the basis of Bollinger Bands, like almost 20 to 30 rupees plus like 10% return on a single stock. And let's say 16th May, 16th, 18th April to 8th May or something is like this. That is how Bollinger Bands actually work in real life. So yeah, now what is called as, so that was a bullish indicator, but what if the market's turned the other way around? So what if the there is a breakdown in bands? So let's say, okay, so this is TCS chart after the Q2 Q3 results, which were I guess a couple of months ago. So here what happened was that on the previous day it made an intraday high of almost 4,000, if you can see. You see, there's a big gap down opening. So let's say that intraday high was around 3980, and the next day and the evening results came out. The sentiment of the result wasn't very good, which created a gap down opening. The gap down opening was such that it broke the lower band of the Bollinger, if you can see in the graph. The breakdown was such that even if after falling more than 8 to 9%, no, falling almost 4 to 5% from its intraday high, then to the Bollinger Band was then successfully. So if there was more volume in the stock, there was volume. See, so that broke from almost 3,700 levels, but it came down to almost 3,400 levels, which is again almost a 10% drop in according to the bank. So spotting this Bollinger Bands can give you a high risk reward ratio. So yeah, so let's say I'll repeat it again. So let's say this is Tata Consultancy's 1-day chart. So let's say the results came out, and after market hours the results came out, and due to which the public and the sentiment wasn't great about the result, due to which the stock fell. It had a gap down opening of around 5 to 6%, and the fall was such that it didn't even hold its gains till the Bollinger Band, due to which the Bollinger Band was broken severely, by which the 3,700 high was broken down to almost 3,400 levels. That is how it works in this case. Like there is a breakout, a breakdown, and by which we can derive. So if you see, even after a breakdown, the standard moving average was quite too far. That also makes it a bearish sentiment. And the standard and the simple moving average took time to come down to 3,400 levels. That is because it is a calculated data for almost 20 days in this case, at least. So let's say if 20 days data is calculated, there were levels of about 3,800, 3,500, 3,600, 4,000 levels. But to get it under 3,400, it needed some time to some bearish candles, some gap down openings, and some flattish candles, which happened eventually, and due to which the fall continued and the bearish sentiment in the stock continued, and it broke below the 3,400 or almost at the 3,400 level mark, which again makes the gain to almost 10%. So let's say 3,700, you short the script, you have some puts or something, you can have almost a 10% return on your investment, on your trade or whatever. Yeah. So that is how breakdown works with help of Bollinger Bands. Yeah. So this is example of Hero Motocorp, and by which we can study squeeze. So what is a squeeze? As the definition explained earlier, when two bands of Bollinger come close to each other, that time is made by lots of low volatility. So in this previous chart, the stock had volatility. So let's say it made a high of 4,000, it made a low of 3,500, it made a low of 3,400. The stock was volatile. So there is one more factor which you can study. It is called the beta of a stock. So what is the beta of a stock? It helps us study what is the volatility of the stock, which makes it more easier for the trader to, like, high beta stocks are much more riskier for trading. and low beta stocks are much more stable. Those are sleep well at night stocks. Like they might not have certain dangerous risks like what we saw today in RBL Bank. So yeah, so this is a breakdown in Bollinger Bands explained. So yeah, this breakdown and breakout happens due to high volatility. But when the two bands of Bollinger come close to each other, see, if you can see here, the simple moving average has become very constant. Like it is moving sideways only. There is no certain up movement, there is no certain down movement, no breakouts, nothing. It is like a flat line, if you can see, due to which there is no movement in the stock. And the Bollinger Bands have also contracted because you see, the bands of Bollinger are calculated by the simple moving average. But if the simple moving average has become flat, there won't be any changes in the upper bands or lower bands of Bollinger, right? So that is how it is. See, the moving average become constant. So did the upper and the lower band also became constant because it is derived from the simple moving. Hence, when two bands of Bollinger come very close to each other, the stock is sideways, or maybe the price has come at a price of consolidation. See, if you can see, this is for the daily chart, but if you can see at 9:30 when the stock opened, it was flat, and by 11:50 or 12 o'clock also it was flat only, with almost no volumes in stock. The volume here was only 218 shares. So thus there was no volume spurt. The moving average was also constant, and the bands of Bollinger were coming close to each other, which created a certain momentum in which there is no moment in the stock. See, technically, if you see the stock is a range bound, it makes a high of 2390 and it comes back to 2378. So it is an intraday chart, but that makes the stock sideways, and the sideways stock is because both lower and the upper band of Bollinger have come closer. So that is what is called a squeeze, and that's how squeezes work. Because in stocks like Hero MotoCorp, ITC, the squeeze condition has become very common, due to which there is no movement in the script. So if there is no movement and the simple moving average stays constant at levels like this, it makes it very common for that. It makes it very common that the script will be having low volatility. Yeah, so I'll explain all these three structures once again. So I'll just run through it. So breakout and band. So breakout and Bollinger Band. So let's say this ITC chart. It gave a good breakout and with volumes in the upper candle, due to which there was a good breakout with volumes. So you can see the volume had hit a very high, which was nowhere close to a daily volume candle. It had a good volume in the stock, which caused the breakout in Bollinger Band. It crossed the upper level of the Bollinger. So at around let's say if you take Bollinger Bands as your premium technical indicator, so let's say it gives you a positive thing that, let's say, a good break was seen around 266 rupees in Bollinger with good volumes. And if you long that script, which is ITC, if you long at 266, and on the upward side in, let's say, a week or two, it took it to 288 to 290 rupees, and your risk was rewarded by almost 10 to 12% gain in the script. So that is how breakout and Bollinger Bands work. Same with breakdown. So let's say this is Tata Consultancy's chart. After results, there was a sentiment which was bearish overall, which created a fall in the market. And the fall in the markets was such that it didn't even hold the upper band of the Bollinger, due to which the stock submerged, and if you can see there was a sell opportunity at around 3,700. If that was done by any traders or something, it could have rewarded almost 10 to 12% gain by shorting the stocks. So that is how it works. Next is a squeeze. What is a squeeze? Squeeze is something in which the volatility reduces drastically. The stock becomes range bound. It does not have volatility. It is a flat stock. it beta reduces, and like there is no gap up, gap down. The stock is flat where it was. It remains range bound and sideways. Yeah. Now Yash will explain my strategy. Over to Yash.
Thank you, Chintan, for giving a brief introduction on Bollinger Bands, and I hope it was and I hope everybody got to understand how Bollinger Band actually works and how you can generate alphas during how you can generate alphas in the Bollinger like using Bollinger Band indicators. So now I'll take you to the platform which is going to actually help you to actually automate your trading experience end to end and create a seamless trading journey for you. So I'll just share my screen, actually showcase how actually algorithmic trading is done. So I'll take you to our platform. You guys can see if my screen is visible. Yes, if my screen is visible, this is our website, which wherein we people have built one of India's largest marketplace for algorithmic trading strategies, where we people have 200 plus strategies live on our marketplace, coming 200 plus strategies live on our marketplace and covering 5 different major exchanges from BSE, NSE, MCX, which are India's 3 biggest exchanges, along with NYSE and NASDAQ, which is currently under beta mode and will soon be live with NYSE and NASDAQ too. Apart from that, we are connected to 27 plus brokerage houses, where Alice Blue is being our prime brokerage partner, wherein anybody could come in, any Alice Blue customer can come in and actually and directly implement this and directly start algorithmic trading by just logging onto our platform. Apart from that, when we people talk about algorithmic trading, it seems very complex, right? That okay, if I go into algorithmic trading, how do I code strategies? How do I get end-to-end knowledge about the market to actually create the strategy? There is no customization when it comes to strategy development or when it comes to strategy picking, risk management factor. There are different factors like, okay, how do I connect to a broker's API because it is so complicated task? Because it's so complicated task and because it is so complicated task, and how do we actually generate and how do we actually get the part how do we actually integrate with broker, how do we connect to exchanges, and how do we actually connect to different and how do we actually connect to and get the data from. So these were few of the problems which people found during algorithmic trading, and to solve this thing, we people with AlgoBulls have created a stress-free, ready-to-use marketplace wherein you can find 200 plus strategies, ready-to-use strategies, which you can directly integrate with your broker's account, connect it to your broker's account, directly start taking trades in NSE and BSE. And the strategies are designed by experts like Chintan, who are NISM registered and certified, and get the strategy on our marketplace. Apart from that, when we people were talking about strategy, so I'll just take you to the platform from where you can get the strategy from. So you can just log into aliceblue.algobulls.com. This is our exclusive partnership with Alice Blue. Wherein I'll be dropping in the link in the chat section, wherein you can directly log in. And actually once you have got the link, you can either log in through your existing account, or you have an option to log in through Alice Blue. So once you click on login to Alice Blue, you can directly enter your client ID and password, and you can directly log in with your Alice Blue account, or you can even open a new account if you're a non-Alice Blue user. Apart from that, we also have different login options. You can directly sign up if you are a new user by entering your name, email ID, and mobile number and credentials. Or if you are an existing user, you can directly log in with mobile number and password. So once you log into your algorithmic trading platform. Yes, so once you would log in, to the platform, you're going to find this page coming up, which is going to show you buffet of different strategies. So on this, so in our marketplace, we people have a marketplace divided into three categories: retail, premium, and HNI segment. So retail is a segment where we people have cash intraday strategies, equity, like equity derivative future strategies, commodity strategies, wherein the capital requirement is comparatively less, and also the risk associated to the strategy is also comparatively less. So over here, you could find few of the strategies towards the equity trading and equity intraday segment. Then we people have a premium segment wherein you can find option buying strategies, wherein we people have option buying and wherein we people have option buying strategies towards the market, wherein we people have option buying strategies which are considerably coming in with higher ticket size, and we people and the strategies have higher risk ratio too, risk to reward ratio too, along with the option trading model. Apart from that, we people have an HNI marketplace wherein we people have strategy with much larger capital and much larger risk appetite, which are option selling strategies, cross hedging strategies, and multi-leg strategies, which are used by hedge funds to generate better alpha. Apart from that, to get into Chintan's strategy, I would be dropping a strategy code. I'll be dropping a strategy link too, which is the strategy's name is mean reversal. I'm sharing the strategy link also over to the chat section so that people can directly log in. And now I'll be showing you end-to-end insight about the strategy. So this strategy has been designed by Chintan and his firm, which is TWODS Capital, where they are an innovative firm into financial education sector, and they come in with a lot of years of experience into building strategies towards intraday based system. So over here you would be finding basic information of the strategy, like what is the minimum capital required for the strategy. There were a few questions in the chat section regarding this. So minimum capital required is 18,000 rupees. And then and people were asking, okay, what would be the recommended days to actually keep the strategy. So the type of the strategy is intraday. So on a daily basis, the trading would happen on the strategy, but the recommended duration to keep the strategy live is around 180 days. Apart from that, talking about this art, apart from that, there are a few of the basic detail like the exchanges NSE segment is NSE. This strategy is being performed on BEHL, which is Bharat Heavy Electronic Limited, and this is an intraday based strategy which captures the system on the basis of Bollinger Band, which Chintan was explaining about. And here are a few of the parameters which is currently public to actually show you how you can actually see this strategy, and you can actually find on what basis the strategy makes decision for. Apart from that, I would like to take you through the backtesting report, which gives you end-to-end insight about how the strategy has been moving over the period of times. So in the backtesting report, like usually when we people study mutual fund, or when we people invest in a mutual fund, we see its fact sheet, and we actually think, okay, how good this mutual fund is performing, that a fact sheet would tell. Similarly, in algorithmic trading, we people call this the backtesting report, which gives us end-to-end insight about how good the strategy has been performing. So in this case, this is the ROI report, which gives you end-to-end insight about how the strategy has been performing. And ROI, and talking about ROI for the strategy. So like talking about the summary section, which gives you end-to-end insight about ROI in INR. So the strategy over the period of 12 months has generated an ROI of 22,134 rupees, and ROI in percentage was of around 122. ROI in percentages was around 122%. And the maximum drawdown, which is the maximum loss the strategy has faced in a day, was of around minus 13%. And total number of trades taken on over the period of 12 months were around 572 trades. Number of win trades were 270. Number of lost trades were 302. So talking about the hit ratio of the strategy, which is like win rates upon lost trades, is around 47.2, which brings it almost at a hit ratio of around 50%. And the average trade it takes on a daily basis is around 2 trades. And the maximum of the trades in this are number of long trades and short trades are almost equal. And the maximum gain this strategy has given you in a day was around 2,394 rupees. And the maximum loss the strategy gave you of around 1,743 rupees. And on a daily basis, the strategy average profit booking ratio is around 263.21 rupees, and the average loss booking ratio is around 161 rupees. Apart from that, when we people talk about returns, so also over the period of 12 months, the strategy has given you a return of 121 percentile. And in the last 30 days, the strategy has been going negative towards -8%. In the previous 2 weeks, it gave you a negative return of -5. And in this 3 days, it has been giving you a return of -1.28, wherein we people could see market coming back to the stable zone, market getting towards the bullish zone. That's the reason we people could see the strategy moving upwards and sidewards. Apart from that, when we people talk about trade book, to maintain 100% transparency on our website, we people publish each and every trade book report regarding to the strategy. So on the trade book section, you could see each and every quantity and each and every trade punched in regarding the strategy onto our trade book section. And similarly, since reading the trade book for all the 12 months would be a really difficult job, what we people have done is to simplify the job. We people have got this in a graphical format in an insight section. So to read all the trades over the 12 months, to read all the trades over the period of 12 months, we people have got this to an insight section, which gives you end-to-end insight on how the strategy has been moving over the period of 12 months. Similarly, you can see PNL and INR, like what were the daily profits and daily loss over the period of 12 months. Similarly, we could see PNL in percentage, like what was the PNL in percentage over the period of this 12 months. Similarly, you could see the ROI, like on initial day, you could see ROI was of around 1,000, 2,000 rupees, and it was moving at a stable consolidated zone. Suddenly during 2021, you could see ROI going in from 10,000, 5,000 rupees, and then now the ROI has almost had a peak of around 26, 27,000 rupees, and currently the ROI is at 22,000 rupees because of certain drawdown. Apart from that, you could see ROI in percentage too, wherein it gives you end-to-end insight that how the ROI has been moving in percentile terms, wherein you could see ROI has almost touched in the maximum percentage of 149%, and currently it is an ROI of 121% as the trades get updated on daily basis. Apart from that, when we people talk about equity curve, this strategy started with around 18,000 rupees, and then it gave you a hike of 19.6, and then it was at a stable zone of 19-20,000 till maybe 2022. Till maybe 1st January, 15 Jan 2022, and then later on you could see how the strategy has picked up, and it has almost gave you a return of another almost 100% over the period of 12 months. Similarly, you could see the maximum loss the strategy or the maximum drawdown the strategy faced was of around 13%, and this 13% was during the March month of 2022 during the second lockdown. And similarly you could see during current market crash too, it also came down to a drawdown of -10%, which could actually be depicted, which could also be depicted from the section on the front page. Now to directly get this strategy on your account, you just need to click on execute, and this strategy would be added to your portfolio. Once the strategy is added to your portfolio, once the strategy is directly added to your portfolio, you can change few of the parameters over here with respect to lot quantities, with respect to PNL appetite. So I'll explain you what PNL appetite is. So in this strategy, you could see, okay, the initial number of quantity, the initial number of profit was around like average number of profit around a day was around 800, 500, around 250 rupees. So over here you can set profit desired to 2500 rupees, and the risk appetite to be around 1,000 rupees, considering 10 lot size. And you can just click on save, and you can click on start. So over here, the trading won't happen on 18,000 rupees. It will happen on 1 lakh rupees, wherein your margin is being used from your broker's account. And this is how well you can manage your risk, and you can manage your profit desired with respect to the strategy. Similarly, like during the market hours, you can just click on start. This is going to ask you for a confirmation. And once you've given a confirmation, the strategy would automatically start running in your trading account. So I'll just show you how again. So in case if you weren't able to log in, using in the starting phase, you can log in once again. using the brokerage section, you can just click over here, Angel Brokerage. Like you can just click over here and actually you can just go to aliceblue.com and go to the brokerage section and just again log in. And once you go to brokerage section, you could just find Alice Blue and you can sign in with Alice Blue. Over here again, you can enter your client ID and password and actually enter the four-digit OTP authentication pin, and you can directly start trading again. Apart from that, talking about the pricing part, so for Alice Blue customers, we people have smart plans wherein if you want to access Chintan strategy, which comes under equity trading strategy, you can get access to strategy at 1,000 rupees per month plus GST, which will take it to 1,180 rupees a month. Apart from that, we people also have option trading strategies, and we people also have different strategies. So with respect to all the strategies in retail marketplace, you would get it at 2,500 per month plus GST. With respect to retail and premium strategies, which means option buying strategies too, you get access to all of them at 4,500 rupees plus GST in a month. And access all retail premium and HNI segment, which means you get access to all the hedge fund risk managed strategies too. So for that access, you would be getting around 7,500 rupees plus GST, which is the per month access. And in case if you're looking for paper trading, real trading for your portfolio too, which is exclusively for Alice Blue customers, you get that package at around 11,000 rupees plus GST, wherein you can do unlimited paper trading and unlimited backtesting for any of the strategy. Once you click, once you click over here, it will take you to an option to add amount, and post that you can add the amount and actually start trading directly. So this was it about the strategy presentation and etc. Now we would be open for the questions. Chintan, I think so you have a question in the Q&A section. Is it possible to capture such breakout and breakdown moves on lower time frames so that we can capture this in the early stage?
So see, everything is not just based on a single indicator, sans VK. So everything is not based on a single indicator. See, if Bollinger Bands can show a breakout, we need to focus on other things like what is the volume? Is it doing on a multiplier volume or something, or that the volume is flat? Whether is there some sentimental boost so that there is such a big bounce shown in the script? So there are many factors by which we have to calculate our risk, and then we have to maybe take up the position, is what I feel. Is there any trial period for it? Yes.
Yeah, so talking about trial period, VPI. So talking about paper trading, you can do paper trading. You can just log into our platform and do paper trading. So so there is no need for trial period in that. You can anytime log into the platform and do the paper trading. For the real trading part, you would need to purchase the plan. There is no trial period in that. Yes. So I think so we are done with all the questions, and we are done with all the questions, and I think so we have resolved everything. So thank you guys for joining us on this webinar. Okay, we have one last question. What is the fees for option trading? So talking about fees for option trading is 4,500 rupees if it's option buying if you want option buying strategies, which is premium marketplace, it's 4,500 rupees per month, excluding GST. And if you want option selling options and option hedging strategy, it comes around 6,500 rupees a month. Apart from that, I'll also drop my contact details, so wherein you can directly get in. I'll directly get in touch with you. I'll just drop in my contact details so that you guys can directly get in touch with me, or you can directly get in touch with Mr. Chaitanya, to actually find which plan suits the best for you. Apart from that, if you guys have any strategy which you guys wanted to develop, you can actually push a request onto my email, and I'll be happy to connect with you. So talking about option strategies, I just conducted a option trading strategy today morning, which was on price action. I'll be Anish, you can directly get in touch with me. I'll share you the link, and we guys can connect one-on-one to talking about the risk management with option trading strategy. Yes, Anish, it is a fully automated algorithmic trading platform wherein you can wherein your orders get squared off automatically, your order gets punched in automatically. You just need to click on start and it automatically executes everything. So I've dropped in my details over the chat section. You can directly get in touch with me and we guys can discuss further. And yes, and you guys can and Chintan has also joined. Chintan has also dropped this link for link to join his open group for which is educational channel for stock market. You guys can join that group too to get insights from Chintan about trading. So yes, thanks guys for joining us on this webinar. It was a great time interacting with you, Chintan, and thanks for providing such wonderful insights about Bollinger Bands and markets. Now, hopefully we guys would connect once again during the end of the year, conducting a live trading section, and mostly see you next time.
Yeah.
Thanks, Chintan. Thanks everybody for joining us on this webinar.
Thank you so much for joining. Yeah. Bye-bye.